CPI inflation update using the business cycle modeling. And if I can think of it, I'll do a little midday update on the stock market at the end. I'm Rich Paz for Critical Point, Friday, February 13, 10:45 a.m. Eastern Time. Okay, we got the CPI inflation report, and it came in at 2.4%. I think it was actually 2.39, and that was lower than what they were expecting. They were looking for 2.5. The market went up some, and then it went down, and it went up, and then went down, and the stock market didn't seem to pay much attention to that inflation report. The interesting thing is we got a good jobs report earlier in the week, and they actually sold the market hard. So it's obvious they're looking at other things, they're worried over other things, and it didn't mean such. On the jobs report, it does look like if you dig deep and wide, broad, it was a good report. But I think we've set the bar so low that we're so happy to get any kind of jobs that the stock market is saying, yeah, but it ought to be better than that. Why are you excited? Okay. So by the time they put their money where their mouth is, they're not that optimistic. They want to see more months of job creation. They really are concerned. We lost 68,000 jobs in manufacturing, that we've lowered the number of jobs for 2025 by over 1 million jobs. So they've been calculating too high month after month after month and got caught up for at least last year. It looks ugly under Trump when it comes to jobs. But the unemployment did back off. There's some hopes that things are going to start improving. And as long as unemployment doesn't go back above 4.5%, the business cycle model is saying there is a chance to pull this unemployment down a bit, create a few more jobs, and at least move sideways at least for quite some time this year. That could be a positive for the stock market eventually. But right at the moment, the stock market is saying it wants more proof, and there's other things to worry about. Now, on the CPI, they got the same attitude. The CPI was down to 2.4%. And people saying, oh, this is a good CPI inflation report, and the stock market hasn't done much of anything with it. Again, they're looking at other things, worried about other things. I think they've got it in their heads now. Yeah, inflation's probably going down for quite some time, or at least not going up for quite some time, and they're okay with it, and they're just looking at other things. They're moving beyond it, okay? So let's take a look at where we're at for inflation, and what I wanted to point out, in the 2020 recession, we put in a super cycle bottom. We put in the once-a-decade juggler business cycle bottom that related to the once-a-decade buy signal in the stock market. And then we also put in a kitchen business cycle that's a throttle up, throttle down process of the juggler business cycle, okay? And the kitchen business cycle is quite short, 3 to 4 years, maybe 2 to 4 in some markets or some data. And that's shorter than what Kitchen said, but I've learned I've got the more accurate version, okay? So at any rate, what we have is, this is a kitchen business cycle when it didn't work, but we have to time it clockwise. And it blipped up one last into a kitchen top. So bottom and immediately to a top. Ended this entire up move, and of course we know why. We raised interest rates and killed inflation, okay? At least for the kill. Now, when I say kill inflation, most of it all, when we say inflation, we mean the inflation rate, the rate of change, the percent. The inflation itself can be viewed as an index, like a dollar price thing, and that's just still going higher. And it's gone higher forever, and it probably will go higher forever. Things just always get more expensive in the store. And businesses actually create more of this inflation than printed money and the government and Federal Reserve, believe it or not. But there's shorter period of times that, yes, the Fed created too much money and created an inflation problem. There's also a shorter period of time where you and I as consumers, we hoard things. We get carried away. We get happy and dappy about the future, and we don't fight for lower prices, and we want more stuff, and we just spend more, and we normally wrap up more debt, and that creates the next recession. But businesses also do the same thing, and they create the next recession. But overall, in my opinion, the history of inflation, it's really more of a business problem than it is a printed money problem. And there's some wonderful charts out this week. They come out every few months. People start talking about this, and then they revisit it a few months later. And they're starting to show studies that, boy, it's just not adding up that the government creates inflation. And yet we're taught in the textbooks, you got people out there who are vicious and mean if you say, oh, it's not the government, you know. But that's where we're at. At any rate, got it down, and right here was a kitchen business cycle bottom. And then it moved up, but then it came a little bit lower, warning it wants to go lower into next kitchen business cycle bottom, but instead it blipped up off the tariffs with Trump, but went into a kitchen business cycle, and that's all we got out of the tariffs. Why is that? because businesses bought a lot just before the tariffs. And then instead of immediately selling that and making all the profit they possibly could, they instead mixed it in with the next batch of supply that was a much higher price because of the tariffs. They blended it. And I wished I'd thought more about this because I grew up in the 90s, 80s working for commodity companies, and I traded grain myself and grew grain. And a lot of those grain companies, if they ran into problems contracting with people and it was the wrong price, they just blended it in with things that were not priced or better priced. And then they showed a better average price for their business, for their customers and clients and whatever, okay? Businesses were just doing the same thing. That smoothed out this inflation run-up. Now, I also think businesses also swallowed some of that inflation. And you may recall a few months ago, Trump told businesses need to shut up and just swallow that tariff cost. Don't pass it on to the consumer. Well, we already know the consumer is paying more anyways, okay? Maybe the inflation rate only bounced back to 3%, but the point is you paid 3% more than the prior year, okay? And you paid more than that before that. And then back in 2022, you paid probably 10% more, okay? And then, of course, we all know really that inflation rate is never as high as it really is for you and I, because the government calculates that if you got an improvement in that product and service and the price was up, they assume that part of that paid for that improvement, and that was actually a good thing. So they don't calculate inflation as high as what we might really think, okay? At any rate, it does look like it's coming down, and this down move this month, or for January, was a sizable drop in today's report, and it's pulling back to these lows. The model's saying that probably inflation is going lower or sideways, but difficult to go up all the way into September of this year on into next year. So you're probably thinking, well, what happened to my idea of higher inflation late this year onto next year? It's been reduced a lot by probability. That's all there is to it. That's all I can say, okay? I guess the tariff thing isn't going to make this last minute sudden shot up on us. It's going to be other things, okay? We worked our way through it. And it's rather fascinating and goes with this resilient economy kind of thing to work our way through it. All right. So as a backup, though, if we see inflation over 3.022%, you might want to round it up to like 3.03, see that, which would be the high right there of last year, the kitchen business cycle high. I think we should get nervous. Inflation's going higher. And if it does that this year, then we should get nervous. Something's wrong with this latest forecast for now lower to neutral inflation, okay? So we can use that as a backup for trend following to get back on board of higher inflation. But we probably shouldn't get concerned until inflation goes up around where it was early 2024, around 3.5%. Trigger that, we should get worried that unless we're convinced it's going to stop right then and there, that there is time to go still higher. And by the time it goes to 4%, the Federal Reserve really should be on board at raising interest rates. And I think the free market will raise interest rates long before that. Now, the bond prices are taking a hit because I think they're tired of playing the game of higher inflation. I think as of this week, they just said, screw it, this inflation ain't going up. Somehow, this tariff stuff come through. And you can bet Trump's going to pound his chest saying, I told you. Yeah, but if you look at what people are really spending, people spent $1,000 more per household last year because of the tariffs. You know what they're going to spend this year? $1,300 more, okay? But the weird thing is, when it trickles through how these businesses are doing things, some of them are losing a bit. They're making less profit. They're not actually losing. They're making less profit and swallowing it. They had been blending it in. That's why a lot of us thought later this year we're going to see a surge of inflation because they're going to run out of all that cheap stuff and they got to pay more and they got to ask more. Well, if this economy really picks up good, I think you will see businesses saying, we want a payback here. All right, we helped out too much of holding back that tariff expense. We want more. Inflation's probably going to jump right along with any kind of a jump in the economy. I don't think the economy is going to jump that much, but I do think it can probably improve this year. So I look at it, I've been saying all along probably the economy can grow this year, but I also said inflation's going higher this year. Now I'm backing off on inflation. That might make the economy look a little better on the GDP side, But the weird thing is, so far, the stock market is saying this isn't the year to really bet on improving economy. Why? Because I think they're really, really nervous of what's going on the Trump side and where we're going for midterm elections. I think they're worried about other things within inside our economy that are slipping, deteriorating, and they may also be nervous that this AI bubble is finally imploding, bursting, or at least letting air out of it, and which can cause a scare for a little while. And that could be a good thing, let a little air out of it, and then we can do better later on this decade, perhaps, all right? So I think you got a lot of nervous traders out there, and I also think they're just frustrated. I want to say they're getting bored, but I think it's more they're frustrated in the sense they really haven't made any money since October. You can take it even farther back than that, okay? But they really haven't done much of anything. And I think they're getting tired of that. And I think they're planning that they feel like everybody else is going to sell before the election, so they're going to sell before the election too. Well, when are they going to do that? Well, they don't have to do it till September, October probably, okay? But they may do it sooner. And so the debate is, how bullish do they want to be into summer and then be bearish? So I think that limits the upside here into summer. And I think we're going to have a frustrating market for most of the year, frankly. And then things improve after the election. And I think a lot of people are going to say, no matter how that election goes, we're going to be optimistic and be bullish after. We just have to get past it, okay? All right, that's what I have for an update for inflation. I'm back to being bearish inflation. How low can it go? We might yet see 2%, and boy, the Federal Reserve is going to feel pretty happy over that, and that'll allow them to lower interest rates more, which could still give a boost to the economy a little later this year and improve the stock market perhaps. But then again, we still have to worry about that midterm election. What else is going to screw up under the whole Trump agenda, Trump government, and can we see that lingering kickback on tariffs yet? I suspect we won't see it until we see the economy really growing, and then the businessmen are going to say, I want my money back, okay? And they're going to charge more in the store, and then we'll see it pick up. Now, I also think the consumer, who has actually moved the economy more forward last year than AI. Everybody thought it was just AI. They finally talked me into it by the start of this year that AI was the only thing holding up the whole economy. The interesting thing is, when we look back at it, no, it was really the consumer. Well, the consumer is probably the biggest one, immediately followed by business. Those are the two big things that drive our economy. So that kind of makes sense. That's okay. So the consumer is willing to buy all those higher and higher prices? No. It scared them, they hurt, but they just figured it's just going to get more expensive later. I might as well buy today. And they racked their credit cards right up to the max, and some of them are not paying it. So the day of reckoning is coming. We're going to have a recession, but it just doesn't have to be here for a while yet. It could be a few years away. Those are not timing tools, but they have problems. What I'm wondering now, if they see evidence of, inflation starting to surge, but so are interest rates, and the Fed's going to raise interest rates, I think they're actually going to cut back from buying and help bring down the inflation, but they're going to do it sooner than they normally would because they've already bought it off and racked it up anyways. But they're finally going to luck out saying, 6, 12 months later, inflation may be down enough I can actually see some bargains once in a while. Well, then they will actually help create that because they pull back. But that's also going to weaken the economy a little bit too. But that's what we normally do with raising interest rates. It's a psychological game. It really doesn't work directly to change the economy and the mechanics. It really just scares businesses and people to back off. Until we get those higher interest rates along with higher inflation, I got a feeling the consumer is just going to keep buying here. All right, so that's our update on inflation and the business cycle, and a bit on the jobs report. Okay, here's the NASDAQ index 6-hour chart for the futures, and they just don't know what to do. They've done nothing off a good inflation report. They've done nothing but sell off a good jobs report. So obviously they're looking at other things. And Goldman Sachs said earlier at the beginning of the week, right after I wrote my notes from a napkin on Friday and said, I'm flipping to bearish in March, April. Suddenly Goldman Sachs comes out on Monday and says, look at this seasonal for the NASDAQ index. Normally people pull money out after this week, and they pull it out all the way into March. So that kind of made me think, we got a chance to be right on this March, April. But come next week, we need to get more serious. What if it does go up into March, April anyways? And we'll discuss that. At any rate, it looks like to me, level 3 trend ought to be down into the model's saying next Tuesday and later. I'm saying next Wednesday and later. for a level 3 bottom, and then it ought to rebound at least a few days and maybe even up to a week and a half. Okay, so I say there's more selling coming next week. But the problem is they beat it up well this week. We've had 3 significant waves of selling here this week, and they may be getting tired out, and they may not put it lower. But I just wonder, they might put it lower than last week. Okay, and I don't think much lower than last week, but we do want to watch out for that. Now, for the level 4s, for your day traders, interweek traders, it should bottom and go higher today, and then it can be down Monday, Tuesday. It may be higher into Sunday night and then down Monday, Tuesday. It may be higher into Monday to even Tuesday and down only Tuesday. Why these different scenarios? Well, it's right in this range here where ahead of the CPI inflation report, they got all carried away and shook up and just confused, if you will. Then they get the news yesterday of a big real estate organization saying, hey, we've got a bit of a crisis going on here. There's too many homes and people aren't buying them, okay? So that scared them. Where are we going with the economy? All right. So the bond market put interest rates down sharply this week because of all this bad stuff, but they're trying to help out in the sense they see a weaker economy. They're now less worried over inflation. After this inflation report, that's made them even more happy to buy bonds and put interest rates down because they think there's less inflation risk. But they may also be saying, hey, if we don't lower interest rates, some of these other negative things may become more serious. Maybe the economy begins to actually slip. And that's what the stock market's now scratching its head saying, all right, maybe the bond market thinks it's got this figured out why it's going lower, but it's really playing 2 different stories. And one of them really isn't good for stocks, okay, and the economy. All right, very fascinating week to be so bearish and yet have some confusing moments here right in that area there, what they really wanted to do. So I can't help you that much looking out into Monday. It looks like it should bounce, but looking further out in the week, it ought to be down. So I'm just going to say, hey, follow the level 3 trend. It ought to be down into late next week, and then we'll have a discussion about those more important trends. What are we really going to do into March, April, as well as into May, June, July? Past results are not necessarily indicative of future results. Have a great weekend. Thank you. But I am now bearish to neutral inflation, and maybe for quite a while longer than I thought. I question if we're going to see that tariff impact. It may have to come from a much better improving economy, and I'm not convinced it's doing that. I got to see more from those jobs report being better. That we set the bar so low that we got happy off of that jobs report, but the investors then said, yeah, but why are we doing that? Okay, they're saying we want more jobs report that's better than that because, frankly, the jobs market sucks from last year into this. Thank you.